Preparing for a FP&A Analyst at Migros interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does FP&A mean to you, and how would you add value at Migros? FP&A is the forward-looking finance discipline that connects operating plans, forecasts, and performance decisions. At Migros, I would translate sales drivers such as traffic, basket size, pricing, promotions, and store productivity into financial forecasts. I would compare actuals with budget, explain variances in business language, and challenge assumptions constructively. The objective is not merely to report numbers. It is to help management allocate resources while protecting affordability, margins, liquidity, and long-term cooperative value. While answering, focus on planning, forecasting, performance analysis, decision support, and translating retail drivers into financial outcomes while balancing affordability, profitability, liquidity, and Migros's long-term cooperative purpose. Question 2. How would you build a sales forecast for a Migros supermarket business? I would build the forecast from operational drivers rather than applying a simple growth percentage. I would separate existing store sales from new openings and estimate transactions, average basket, pricing, promotional uplift, holidays, and seasonal patterns. I would review category and regional trends, then test assumptions with commercial and store teams. Finally, I would compare the model with external market indicators and prior forecast accuracy, document risks, and update the outlook as actual trading data arrives. Make sure to cover historical trends, like-for-like sales, store openings, traffic, basket size, pricing, promotions, seasonality, calendar effects, cannibalization, and validation through operational stakeholders. Question 3. Walk me through how you would analyze a monthly sales variance. I would first reconcile reported sales to the approved budget and confirm that the period, scope, and data definitions match. Then I would decompose the variance into transaction volume, average basket, pricing, product mix, promotions, calendar timing, and exceptional items. I would compare regions, stores, and categories to identify the real driver. After discussing the result with commercial owners, I would quantify the full-year impact, recommend actions, and update the forecast if the trend is structural. In your answer, talk about decomposing the variance into volume, price, mix, promotions, timing, FX where relevant, and one-offs, then linking findings to actions and forecast updates. Question 4. What is the difference between a budget, a forecast, and a target? A budget is an approved financial plan used to allocate resources and establish accountability for a defined period. A forecast is the best current estimate of what will happen, incorporating new information and remaining flexible. A target is an intended level of performance, which may be more ambitious than the forecast. At Migros, I would keep those concepts distinct so management can see both the realistic outlook and the actions required to close the gap to strategic objectives. Be sure to mention that budgets allocate resources for a defined period, forecasts provide the latest unbiased outlook, and targets express desired performance. Explain how each supports different management decisions. Question 5. How would you prepare a rolling forecast? I would maintain a consistent forward-looking horizon, such as the next 12 months, and replace the closed month with a new future period. Each cycle would begin with actual results and a review of forecast errors. I would refresh major drivers including sales, margin, labor, logistics, rent, capital expenditure, and working capital, while retaining stable assumptions where appropriate. I would present changes versus the prior forecast, explain risks and opportunities, and agree ownership for corrective actions. Focus on maintaining a forward-looking horizon, refreshing key drivers, incorporating actual results, documenting assumptions, involving stakeholders, and highlighting changes from the previous forecast rather than rebuilding everything unnecessarily. Question 6. Which KPIs would you monitor for a grocery retailer such as Migros? I would monitor KPIs across growth, profitability, operations, and cash. Core measures include total and like-for-like sales, transactions, average basket, gross margin, promotional effectiveness, shrink and waste, labor cost per sales unit, inventory turns, availability, capital expenditure, and operating cash flow. I would also consider customer satisfaction and relevant sustainability indicators. The key is connecting metrics. For example, higher sales are less valuable if promotions reduce margin or inventory investment weakens cash generation. In your answer, cover revenue, like-for-like growth, transactions, basket size, gross margin, waste, labor productivity, inventory turns, availability, cash flow, and customer or sustainability indicators. Question 7. How would you explain a gross margin decline at Migros? I would bridge the margin change using revenue and cost drivers rather than assuming one explanation. I would analyze supplier cost inflation, retail pricing, promotional depth, category mix, private label exposure, waste, markdowns, shrink, and foreign exchange where relevant. I would separate temporary timing effects from structural pressure, then test whether pricing actions protected absolute profit without damaging volume. My conclusion would include quantified drivers, management actions, and the expected margin trajectory in the next forecast. Make sure to cover price and cost inflation, product mix, promotions, supplier terms, shrink, waste, markdowns, foreign exchange, timing, and the distinction between temporary and structural margin pressure. Question 8. How would you evaluate whether a promotion was financially successful? I would compare promoted performance with a credible baseline, ideally using similar stores, categories, or prior periods. I would measure incremental units, net sales, gross profit, supplier funding, cannibalization of other products, waste, and inventory effects. A promotion can increase revenue while destroying profit, so I would calculate incremental contribution after all direct costs. I would also assess whether it attracted new customers or merely shifted purchase timing, then recommend changes to pricing, timing, or product selection. Discuss incremental volume, baseline sales, net revenue, gross profit, cannibalization, supplier funding, inventory effects, customer behavior, and post-promotion performance rather than judging success from sales uplift alone. Question 9. Describe your approach to an annual planning cycle. I would start by translating strategy into planning assumptions, including growth, margin, productivity, investment, and cash priorities. I would issue clear instructions, templates, timelines, and definitions so business units provide comparable inputs. After building bottom-up plans, I would challenge drivers against historical performance and top-down objectives. I would consolidate scenarios, identify capacity and funding trade-offs, resolve inconsistencies with stakeholders, and present a transparent recommendation. Once approved, I would document ownership and use the plan as a performance baseline. Be sure to mention strategic alignment, planning instructions, driver-based assumptions, bottom-up input, top-down challenge, consolidation, scenario analysis, governance, and clear communication of approved commitments. Question 10. How would you forecast operating expenses for a large retail organization? I would classify expenses by behavior and forecast them using the most relevant driver. Labor would reflect headcount, hours, wage rates, and productivity. Logistics would reflect volumes, routes, and fuel. Utilities would incorporate consumption and market prices. Rent would follow contracts and openings. I would separately identify initiatives, inflation, and one-offs. I would reconcile the model to the general ledger, challenge unexplained growth, and show management both the committed base and controllable opportunities. Focus on separating fixed and variable costs, using operational drivers, modeling headcount and wage changes, rent, logistics, utilities, marketing, inflation, initiatives, and one-time items with clear ownership. Question 11. What is working capital, and how would you improve it in retail? Working capital is the cash tied up in operating assets and liabilities, especially inventory, receivables, and payables. In retail, I would focus primarily on inventory because availability and cash compete for attention. I would analyze stock turns, aging, order parameters, forecast accuracy, markdowns, supplier lead times, and payment terms. Improvements could include better replenishment, reduced slow-moving stock, and negotiated terms, but I would avoid cutting inventory blindly if it creates stockouts, lost sales, or customer dissatisfaction. In your answer, explain inventory, receivables, payables, cash conversion, availability trade-offs, supplier terms, stock aging, forecasting accuracy, and the importance of protecting customer service. Question 12. How would you assess a proposed investment in a new store or distribution capability? I would build an incremental business case covering demand, pricing, margin, operating costs, capital expenditure, working capital, ramp-up, and terminal assumptions. For a new store, I would explicitly model cannibalization of nearby locations and compare scenarios for traffic and basket size. I would evaluate payback, NPV, and return on invested capital, then stress test inflation, delays, and weaker demand. The final recommendation should combine financial returns with strategic factors such as network coverage, resilience, and sustainability. Cover incremental revenue, contribution margin, cannibalization, capital expenditure, working capital, operating costs, ramp-up, payback, NPV, risks, scenarios, and strategic or sustainability benefits. Question 13. Tell me about a time you found an error in a financial report or model. In one reporting cycle, I noticed that an expense trend did not align with operational activity. I reconciled the report to the ledger, traced the issue to a duplicated mapping in the source file, and quantified the impact by department. I corrected the report, informed the manager before distribution, and documented the resolution. I then added a reconciliation check and exception flag to the process. That experience reinforced that accuracy, transparency, and preventive controls matter more than simply meeting a deadline. While answering, focus on how you detected the issue, validated the root cause, assessed materiality, corrected the output, communicated transparently, and introduced a control to prevent recurrence. Question 14. How do you ensure data quality when working with large datasets? I begin by confirming the source, reporting period, entity scope, metric definitions, and expected totals. I perform completeness and duplicate checks, reconcile key figures to the general ledger or operational systems, and investigate unusual movements through reasonableness tests. I preserve a clear audit trail with controlled versions and documented transformations. Before publishing, I review results with the data owner and a business stakeholder. Reliable analysis depends on disciplined input validation, not just polished charts or advanced formulas. Mention source governance, reconciliations, completeness checks, duplicate detection, period and entity validation, reasonableness tests, version control, audit trails, and confirming definitions with data owners. Question 15. Which Excel or analytical tools do you use for FP&A work? I use Excel for driver-based models, reconciliations, pivot analysis, scenario testing, and management schedules, while applying structured formulas and clear checks. Power Query is useful for repeatable data preparation, and ByTools help present trends and drill downs to stakeholders. I would also learn Migros's ERP and reporting environment quickly. My principle is to automate repetitive preparation where possible, but retain transparent logic, documented assumptions, controlled inputs, and review points so the output remains auditable. Be sure to discuss practical Excel modeling, pivot tables, lookups, Power Query, scenario analysis, visualization, ERP or BI systems, automation, and choosing tools that improve control and usability. Question 16. How would you present disappointing forecast results to senior management? I would lead with the headline, the size of the variance, the affected period, and the main drivers. I would separate facts from assumptions and distinguish external pressures from controllable execution issues. Then I would show the full year implication under base, downside, and recovery scenarios. Most importantly, I would present actions, owners, timing, and expected financial impact rather than simply reporting bad news. Senior leaders need clarity about both what changed and what decision is required. Focus on being concise, factual, and forward-looking. Explain the size and causes of the gap, distinguish controllable from external factors, provide scenarios, and recommend specific decisions or actions. Question 17. How would you manage conflicting priorities from commercial and finance stakeholders? I would first understand each stakeholder's objective. Commercial teams may prioritize growth or customer value, while finance may emphasize margin, cash, or risk. I would translate the disagreement into measurable scenarios, showing revenue, contribution, working capital, and longer-term effects. Using shared definitions and transparent assumptions usually moves the discussion from opinion to trade-off. If a decision remains unresolved, I would escalate with balanced options and a recommendation, while maintaining a collaborative relationship after the decision. In your answer, mention listening to objectives, clarifying trade-offs, using common metrics, making assumptions visible, quantifying alternatives, escalating constructively, and supporting decisions without becoming adversarial. Question 18. What would you do if actual sales were materially below forecast halfway through the month? I would first confirm that the data is complete and that the shortfall is not caused by timing, system issues, or a changed scope. I would analyze traffic, basket, categories, regions, availability, pricing, and promotions to identify the driver. I would then calculate the revised month-end run rate and update downside scenarios. With commercial teams, I would assess practical actions, such as targeted availability or promotion changes, while communicating the emerging risk early and avoiding unsupported conclusions from limited data. Cover rapid validation, daily trading data, root cause analysis, revised run rate, scenario updates, communication, controllable actions, and avoiding overreaction to incomplete or timing-related information. Question 19. How would inflation affect your FP&A analysis at Migros? Inflation affects both costs and customer behavior, so I would model it across supplier prices, wages, energy, logistics, rent, and other operating expenses. I would distinguish nominal sales growth from real volume growth and test how price increases influence traffic, basket size, mix, and trade down. I would build sensitivities for cost pass-through and demand elasticity, then monitor margin and market indicators. The analysis should support pricing, sourcing, productivity, and affordability decisions rather than treating inflation as one blanket percentage. Discuss input costs, pricing, volumes, mix, wages, energy, logistics, margin, consumer trade down, real versus nominal growth, and scenario planning across demand and cost sensitivities. Question 20. Why do you want to join Migros as an FP&A analyst? I am attracted to Migros because it combines significant retail complexity with a clear customer and cooperative orientation. FP&A would let me use analysis close to real operating decisions, from pricing and promotions to store productivity, investment, and cash. I enjoy turning imperfect data into a clear recommendation and partnering with non-finance teams to implement it. Migros also offers a meaningful context where affordability, resilience, and sustainability must coexist with strong financial discipline, which is exactly the challenge I want. Be sure to connect your analytical strengths to Migros's retail scale, customer focus, cooperative identity, operational complexity, sustainability ambitions, and opportunity to turn finance insight into practical decisions. If you are still with us, congratulations! You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.